What's going on, trading friends? Of course, we're going to discuss today the buyout. Sure, you've heard of it a little bit. Voyager bought some, in reverse, Binance bought Voyager Digital's assets. It's been an interesting roller coaster going on with that whole situation. We'll talk about that. And we'll take a look at the next upcoming rate hikes and what are the chances of either certain hikes or others. Finally, we'll look at a little interesting statistic between the SPX and the VIX. The relationship's been really weird this year for certain parts of it. In the meantime, my name is Jamal Chandler. Welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. I hope you guys had a fantastic weekend. I did. I mean, it was pretty busy. There was lots happening. You guys know I'm into sports. And so I watched a lot of different sports this past weekend. World Cup final. I mean, that's a big event. A lot of people were there. I'm sure you've seen some of the pictures of a lot of people who were there. Everybody was at that World Cup final. It was really interesting. I don't know. I kind of just happened to turn it on. I didn't watch from the very beginning. Happened to turn it on when Argentina was up 2-0 and think, okay, Messi's going to skate easily to this one. And boom, those two France goals back to back. How crazy was that? Then they even go into extra time and there was still one more goal but scored between both of them. Craziness. Then you go to the shootout, right? I mean, it was an awesome game, dude. I can't lie. I didn't watch a ton of games. I might have watched, 4, maybe 5, the whole tournament. So it was kind of fascinating, but good times, man. Really interesting stuff. NFL, some interesting games this past week. And of course, it's getting down to crunch time for those of you who watch NFL and sports. And I got to tell you, the two craziest games were first the Minnesota and the Colts game. I mean, the Colts sucked, for lack of a better word, and they had Minnesota at home down by 30, and these dudes come back and win that game. Craziness. Worked out betting wise too. The other interesting game was that Raiders game. If you guys saw that yesterday, dude, it's like the craziest highlight going around. I mean, the Raiders went on this last second crazy play that just never happens, especially to a team that's coached by Bill Belichick, because if they were playing against the Patriots, weird stuff, man. It was wild. And, there was plenty of other sports, NBA games, but I don't really want to talk about the Bulls right now. It's not looking good. Bulls have lost 4 in a row. They say nothing bad ever happens to an NBA team until you lose 3 in a row. Well, what happens when you've done that 3 times already and it's not even January yet? It's not good, man. It feels like they're going to make some changes at some point. I know. I don't want to talk about it. I'm not happy. I know my youngest son, too. He's like, this burgeoning Bulls fan. I mean, we went to a game. Maybe some of you who follow me on Twitter have seen it. We had a lot of fun. He enjoyed it. And he's really worried about like the makeup of the team and then possibly changing it. I don't know what's going to happen here, man. But yeah, other than that, overall great weekend. Went to a holiday party with some friends. Lots of fun times. Hey, before we get into the content, those of you who are watching on the Tasty Live webpage, come to the Tasty Live YouTube page, and get in there, get in the chat. Throw in some comments, say what's up, give some shout outs. I'll check in with you guys throughout the show. Let's pull up some slides. Let's chat a little bit about some of these things that we have seeing going on. First up, we talked about what's going on with Binance. Binance US I think there's a difference between Binance US and Binance, the regular Binance. I don't want to get into the details. It doesn't really matter that much for this situation. Binance US is acquiring Voyager Digital's assets for $1 billion, right? Now, Voyager Digital has been in bankruptcy since, I think, July. What's really interesting, for those of you who haven't followed the story, Voyager Digital basically went bankrupt because they loaned money to another company, which escapes my brain right now. I'll have to look it up. They loaned money to Three Arrows Capital, actually, which was a crypto hedge fund out of Singapore, right? They loan money to them, then of course that company goes under, so they can't get the money back that they loaned to them, and so eventually the Voyager Digital has to go under. And this is not the first time Voyager Digital's assets have come up for sale. They actually came up for sale in September. Binance bid on them then. Guess who they were competing against in the bid and who they lost to? FTX. We all know what happened to FTX. And now, of course, these guys remained in limbo and they were still in bankruptcy. And so originally they were buying $50 million while this thing was in bankruptcy. They put a bid in for $50 million, but I think or somewhere around those parts. But I think FTX was able to secure the bid, and that's what happened. Of course, FTX had their troubles, and Voyager Digital remained basically in no man's land until just now, where all the customer assets and everything Binance US is buying. Now, Voya Digital is in the US, so this kind of makes sense. They also have, like, I don't know, somewhere between 2 and 3 million customers. So I think Binance US just wants the customers, of course, but it just shows you the craziness of the nature and valuations in the whole crypto space right now. It's kind of fascinating to see this all go down in such an interesting way, I tell you. Going on the heels of last week, we're looking at what happened. We know the Fed raised 50 basis points, right? And they've talked about staying higher for longer. Now, what that means is, do we ever get any rate cuts in 2023? It's hard to say. I've looked back at videos of myself talking about 2022 and the fact that if we raise it all, it wouldn't raise that much. Nobody knew what was coming, and we certainly aren't going to know what's going to come with regard to rate cuts. All we can do is kind of pay attention to some data that is gotten put out there. And I don't know if rate cuts come until, like, we start seeing job situations slash, which I got a chart on jobs situations in a little bit, but overall, the market is pricing a 60% chance of a 25 basis point rate hike in the February meeting, right? And I think there's another meeting after that in March. And then theoretically, there's another meeting in May, but I don't think people are expecting a rate hike in May, but we'll see what happens. Again, this is what the market is expecting, not what actually ends up happening here. So, but yeah, I mean, I think the terminal rate now is sitting somewhere around 5.25 to 5.5, somewhere, which means that's where they're expecting the Fed to take rates to. Right now, of course, it's 4.25 after the recent hike that we've had, isn't it? I'm starting to lose track of where our current rates are. Yeah, 4.25 to 4.5. That's our current range on rate hikes. So, we'll end up seeing where things eventually go, but in the meantime, I guess it's one of these things that we're going to have to pay attention to. Where do we end up seeing rates go to? Oh, excuse me for a second, guys. Let me using timeout. Yeah, and then finally, the percentage of days where the SPX and VIX are both down is at a multi-decade high. So you need to look no further than today. Look at today. You got VIX down 11 cents thereabouts, and you got obviously SPOOs down 50 handles. SPX is down like 50 handles, right? We're nearing 3,800 on SPX, not on the futures, but on the actual index, we're nearing 3,800. So what does this mean? Typically, for those who aren't familiar, the relationship is inverse, right? About 80% of the time, actually, is really the statistic that the S&P 500 index and the VIX index are inverse to each other, right? But every so often, again, that relationship holds up 20%, 80% of the time. Now, it's still unusual for them to do this so much in one single year. And by that, I mean, the last time it was this high was somewhere around 2002, where it was 14%. This year, we've seen it happen 20% of the time. Now, I'll tell you what I think is happening. One, we've had VIX elevated quite a bit this year. And so even on the days where we've gone down, it wasn't enough to surpass what the VIX was forecasting the market should be. So, for example, even on a day like today, and I know what you're thinking. Generally, the VIX should be down if the market is down, and I tend to agree. However, if the VIX is pricing 1.5% moves, and the market is not down that much, I don't think the VIX budges. I think right now, for example, today, we're getting to a point where the VIX is going to budge, because if you do the rule of 16, right, and the market, like VIX right now is 25.54 divided by 16, that says the VIX is pricing 1.4%, to be specific, 1.41% in either direction in the S&P 500, and right now we're down 1.28. So theoretically, you could say that's what the VIX was pricing coming in today, and we're not eclipsing that move, right? And then when you add in the fact that we've had so many days where the VIX was elevated throughout this year, where we were in the 30s, and with the Russia-Ukraine situation, and then we did have market pull back, but VIX pulled back as well. And then I also think the biggest key here is when the VIX goes up, it means people are buying puts on the S&P 500 index. And if you heard anything that we've said here on Tasty's network, for the most part, there has been no panic in indexes when markets have been down. There haven't been people going out buying puts like crazy. And so I think that's where this this thing is factoring in. It's showing you that throughout most of the year, VIX has been pretty elevated and had some room to come in even when markets were down. Now, on the days where we had super crazy down days, and if the VIX was down, hard to explain, but nevertheless, you would have to say that people weren't buying index puts. It's really what it boils down to. Anyway, leftovers. Do you know a quarter of Americans are pulling back on their investing to cover expenses? Let's move ahead to the next slide. Next slide. What's up, people in the chat? What's going on? Sarosh B, what's up, man? Evan, what's going on, dude? How you doing? Alan Dominguez, what's up, man? JW, what's up, bro? This is an interesting chart here. Top 5 budget areas in need of consumer cash, or I should say in need of cash for consumers. So basically, people are pulling back on investing because, well, things are expensive. We're in an inflationary environment, right? Most of those times when people pull back on those, what are they spending it on? Well, groceries, 58% of the time, apparently. Transportation and gas, 47% of the time. I feel like these things have come down recently, though. I have noticed the grocery bill. I've noticed the gas bill. Things have come in a little bit. Utility bills, 42% of the time. Those are probably going to go up this time of year, especially in the Midwest and colder areas. Anyway, 39% of the time is debt, which I think is really smart. If you're going to pull back on investing, pay debt off for sure. And obviously 34% is housing. So these are those 5 areas: groceries, transportation and gas, utility bills, debt, and housing. I mean, are there any areas where you guys are pulling back? You might be pulling some out of the portfolio and say, you know, I'm going to pay this down right now, or I'm going to do this, or I need it for this. Hopefully you don't need it for groceries and transportation and gas and utility bills. But I totally get it if you've paid down some debt. You know what I mean? Like you can it's all a balance. The trading portfolio, the trading account, your basically your IRA, whatever you have, your future account, whether you have cash on the side, and for your personal life. I don't mean cash in a portfolio. I mean just cash on the side, and whatever holdings you may have, you know, whether it's like, I don't know, physical silver or gold. You know, I personally have physical silver holdings, or, you know, things like that, or debt. You know, you look to pay off debt. So it's all kind of this interesting, delicate balance of, you know, your whole entire lifestyle. You know what I'm saying? Let's move ahead to the next slide. Got a couple of different charts for you guys today that you might find fascinating, if you will. The NASDAQ has recorded 84 one-day moves of 2% or more in either direction this year. It's the most in '02. You can see '08 is really close. '08 had 82. But yeah, '02 had 100. And again, that was a really volatile year. That was like year 2 or 3, I guess, depending on how you look at it, of the dot-com bust. Yeah, it's been a volatile year. I think there's no doubt about it. I think 2022 is going to stand out on a lot of charts. You'll be able to talk about it. You'll be able to say you traded during it. I'm able to say I traded during 2008 and 2009. Although it doesn't show up in here, 2010 was a very interesting year. We saw the May flash crash. 2017 was a very low volatile year. Again, something that you can just kind of like put these things on like scout badges. You know what I mean? Like different years that you traded and you just kind of wear them and you can talk about the year. So this is definitely going to be one of those years that I think you're going to be able to look back and say, yeah, I remember 2022. We had, you know, these crypto crashes, that we saw that bubble pop. We saw what happened with big tech, you know, all of these different things. Let's move ahead. Big tech obviously is what this speaks to because we've been having some big moves. When will stocks and bonds decouple? This is another thing you'll be able to talk about this year. This relationship is not normal. The current correlation is 0.4, positive. It's typically a negative correlation between a treasury bond, as in bond prices. We're not talking yields here. We're talking about bond prices, right? Yields have gone up all year. That means bond prices have gone down most of the year. And obviously the S&P 500 has tanked as well. And so these have been correlated because they've both been going down for most of the year, which has destroyed that notion of that 60-40 portfolio of stocks to bonds, which I'm sure you've heard of. I've never done that myself, but it's definitely something that people have done. It's been a huge benchmark for, I don't know, the last 100 years or whatever it is. When is this correlation going to change? And I think this is one of those things that once this changes, this is going to be this will be one of your sort of markers that this is a new regime, whatever that may be. I'm not saying stocks are going to go up. I'm not saying bonds are going to go up. One of them is going to change eventually, though. When it does, you'll know you're getting back more towards normal market times, I guess, if you will. Let's move ahead to the next slide. We've heard a lot about layoffs and job cuts and for hiring freezes in the tech sector, right? I've for those of you who watch the show regularly, I know I had a chart up, I don't know, a couple weeks back about all the different areas in the tech sector where jobs have either been frozen or jobs have been cut. Now we're starting to see it work its way over to the finance area. And, this is one of those things. This is as a direct result of raising rates, right? It is kind of interesting that it's happening in finance because theoretically rate raises are supposed to be good for finance, right? But still, when you look at the fact of how all of these treasury yield curves are inverted, near-term rates are trading so much higher than far-term rates, that kind of puts a squeeze on financial and banks in particular too, because, well, again, you always got to remember that banks, they typically will borrow on the short term of the curve, right? If you're putting money in a CD or something like that, 1 year, 2 year, and 6 months, those are short terms, right? And we've seen 3 months, 6 months, 1 year, 2 year, those are extremely high. They're all like above 3.5%. And when you look at the fact that the 10 year is just below 3.5%, or the 30 year is just below 3.5%, I think. Let's see what the 30 year is currently trading. We're going to look at this when we go to the portfolio, but 30 years, 3.6%. And if for some reason a bank is lending at, I don't know, let's say 1 year, and that's 4%. But I'm sorry, if they're borrowing at 4.4%, right, and they're lending at 3.6%, well, you got a problem. I mean, you kind of got a problem there. That's just kind of an inverted level of rates that you just don't want to be trading. And so now they're starting to have to look at areas where they need to cut. And we've heard some of these banks come out and talk about cutting. Goldman Sachs said they're going to get rid of hundreds of people. That was back in September. Citibank said they're going to get rid of a bunch of people, dozens or so in November. Redfin, of course, is cutting 13% of their staff. They've had, obviously, there's issues with the home market, right? I mean, rates are so high that people are starting to not buy as much. And there was a huge buying frenzy in late 2020 and early 2021. That was great for those type of people, but you knew that was going to eventually change. HSBC Holdings, very small amount, 230. Kraken, which is not really financial, I guess, more than crypto, but still 1,100 people being cut there. Wells Fargo, hundreds. HSBC, a couple of hundred. Morgan Stanley, a couple thou almost. And Credit Suisse, I mean, they got a tranche of different layoffs coming up over time periods. So, yeah, it's starting to hit other areas of the market besides just tech. And you wonder if this is what eventually leads to the rise in unemployment rate that a lot of people have been expecting with regards to a recession as well. So something to keep an eye on, but seems to be happening. Let's move ahead to the last slide. For earnings, nothing I'm interested in. I mean, nothing at all. I'll probably take a look at General Mills. I'm not trading it. I don't know what to trade right now. This market is weird, as you guys very well know. Markets are sliding down for majority of the day today, but we got earnings in FCell, which is kind of I think that's one of those sort of plays on sort of an ancillary play on the EV market. You got General Mills, of course, which is one of the staples, it's consumer staple type names. And you got FactSet, which is a name I've never really traded, but those are the only few earnings names that I've seen. Bank of Japan is going to have a rate decision on Tuesday. They've been notable for them not really changing their rate, their rate process overall. I mean, they've kept it at zero despite every majority of the other countries in the world admitting to having high inflation and raising rates as a result. And Japan has remained steady. They have remained steady the whole time. We have the crude report on Wednesday, which, again, I'm just spitballing here. I mean, I know the crude report is coming, but it's not someone you're going to watch. It really is not. But there's really not a whole lot going on at all, right? This is one of those quiet weeks. We only have 8 trading days left, not including the day. I only have 8 trading days left in the year 2022. And these are these are coming up on the last few that I'm going to be with you. I'm out next week, just so you know. U.S. GDP, third estimate is coming up on Thursday. Shouldn't deviate too far from what we saw in the second estimate, but you never know. Number of S&P 500 stocks above the 50-day moving average. Well, lo and behold, it's right back around 50% now after these big 4-day slide that we've had here in the markets. Let's move ahead to the platform. Not a whole lot to show you guys on the platform today, I'll be honest with you, but we can look around and see, we talk about a couple of markets, see what things are expecting. So for example, of course, we always look at SPY. We always look at the rest of the week. There's really no It's really there's no catalysts, really, major catalysts, at least for us, like we just said, for the rest of the week. But let's just see what the rest of the week is pricing in. $7 move. That's not quite 2%, right? Maybe 1.7. I don't know. $7 on 378. Yeah, well, probably about 1. Yeah, something like that. Oh, I guess it is. Huh. That doesn't seem right. No, I screwed something up there. Hold on. There we go. 1.8% move expected throughout the rest of the week. And let's see. When we look at markets, we're seeing SPOOs down 50 handles now, NASDAQ down 200, Russell 2000. I mean, I think Russell 2000 and NASDAQ have completely given up the bump that we saw from Powell on 11/30, I believe. Let's take a look here on the chart. Looking at NASDAQ charts. I like to look at charts. I like charts. No, I guess NASDAQ hasn't completely given that move up yet. Remember the big 11/30 move we had on November 30th when Powell talked? I'm pretty sure Russell 2000 has given up the move, though. Yeah, as you can see, that was the move here. We're quite below that. It hasn't fully happened for SPOOs yet. I believe the low here was 37.82. Haven't done it yet, but something to keep an eye on. Yields are up today. This is kind of par for the course of what we've been seeing for most of the year. Yields explode up, and of course, stocks get spooked out. That's what's happened. You see, actually, you know what's going to expire is slash. I took it. I kind of took it off. It hasn't been on the radar, but December VIX is going to expire this coming Wednesday. It's going to be the last time it's going to trade. Always keep in mind, if you have VIX options, pay attention to which future you're trading. If you're trading DEES options, you need to pay attention to DEES VIX futures. You also need to know that those DEES options expire on Tuesday and they settle. You can't trade them on Wednesday morning when the future is settling. So keep that in mind. DEES is currently trading 22.40. You got Jan trading 24.30, and you got November VIX trading 25.30. You got oil down up actually 1.65% today. You got nat gas has been super volatile recently, down 12% today, pretty big. I'm not even sure the reason why. I don't know if I'm not sure. I thought there's supposed to be some kind of cold snap. It's cold snap here right now. I'm not sure what the deal is, unless it's something relating to overseas. I really haven't looked into why nat gas is down the way it is today. Bitcoin is down. Of course, is largely following the market. Today, I'm sure. I know the news for Voyager and Binance, but that's not necessarily negative news. That's a positive thing that even Binance US, has the ability to buy those assets from Voyager. Ether below 1,300. I think those have been the main areas recently. 1,300 for Ether and 17 to 18K for Bitcoin. Gold is down below 1,800 today, which is interesting. I wonder if silver's going to hold 23 and change. I don't look at many of the grains, but 1460 on soy, on the beans, 646.5 on corn, and then you got 747 in the orders. 747 and a quarter on wheat. In the orders means like 0.75 for those of you, some trading jargon for you. Take it home, tell your friends, impress your friends. If something's trading like 775, you can say 7 in the orders. That's what they say. I'm serious. Looking at the chat real quick, Michael Williamson, if I have no bias, should my iron condor always cover the expected move area? Yeah, if you have no bias, it's always the easiest way to sort of get an idea of, let's take, for example, I'm not sure where your position is in, and I don't have a position in TLT, but let's just say TLT is it, right? A lot of times what I've done with my condors is, say I want to go $5 wide. I go, clearly I need to know how to count 5. 101 to 96 put spread. You sell that. And then, I usually look at the tail end of this expected move, right? That brown is the expected move. So I kind of will, do something along those lines. So yeah, that's a good way to kind of think of it. If you have no bias, you don't know the name. You're not really concerned about how the name always moves. You're just looking at the standpoint of its fairly elevated volatility and you want to sell. And that's how you kind of get an idea of where you want to sell. Now, some people will use actual deltas as well. In this case, I didn't really look at the delta. I just looked at the expected move. But a lot of times that expected move is on the tail end of the part that you're selling is usually like the 20 delta, somewhere around there. If you're lucky, it's a 15 or 16 delta. And that usually means it's probably a little bit more elevated in vol. Just something to keep in mind. But yeah, guys, I mean, I haven't traded a lot more recently. I've kind of been quiet over the last couple of days. I did put a bunch of edge on late last week, and it's been beating me up more recently. I had a couple of zebras, as you know about, for those who follow the show. Some bank zebras. CD and Wells Fargo also have a zebra in Delta and UAL. Also decided to get a little spicy and just buy some and basically in the money calls and further out months and triple BY because it is super high interest. Let's see what happens. It's not crazy premium. It's not a huge big deal. It's not a whole lot of extrinsic. So those are some of the trades I have on. Nothing really sexy right now that I'm really in love with, but it's these last couple of days really suck in the market. I mean, there's really not much going on, right? And nothing but downside. And it seems like nobody wants to hold anything throughout the end of the year. It's another 4-day down day. We saw this the beginning of the month, 1, 2, 3, 4, almost 5, I think it was to begin the month, and now we're having it again towards the end of the month here. Will it hold? Will we actually get that? Say it, Santa Claus rally? I don't know. I'm not exactly sure, but I do know it's a good time to be prudent and think about how you're ending the year. If you're going to be off next week, which is something that Julie and I talked about on just show on Friday, looking at ways to sort of keep your portfolio adjusted around that. Folks, that's all I got for today. Thanks for watching. And as always, be smart, be patient, trade small, trade often. I'll see you guys later.